Most people don't lose money in the stock market because the market crashes. They lose money because they panic. They get greedy. They follow emotions instead of logic. And here's the truth. You don't need to predict the market to win. You don't need luck. You don't need to be a genius. You just need the right mindset. Today, we read Breaking Down the Intelligent Investor, the book that shaped Warren Buffett's investing philosophy and taught millions how to build wealth without gambling. Watch closely. This mindset can save you years of costly mistakes. Welcome to Money Mindset Summary, the channel where we simplify powerful financial books into lessons you can use for life. Today's book is The Intelligent Investor by Benjamin Graham, the father of value investing. Before we begin, like this video and subscribe to Money Mindset Summary because every week, we break down ideas that can change your financial future. Now let's begin. Benjamin Graham starts with a powerful idea. Most people think they are investors, but in reality, they are speculators. Speculation is chasing fast money, buying because prices are going up, selling because prices are falling. That's not investing. That's emotional gambling. Investing, on the other hand, is calm. It's patient. It's based on logic, not excitement. An intelligent investor asks, is this asset valuable long-term? Am I protected if things go wrong? If you buy something hoping someone else will pay more tomorrow, you are speculating. If you buy something because it has real value over time, you are investing. The market rewards investors. It punishes speculators. Next, Benjamin Graham introduces a famous character. His name is Mr. Market. Every day, Mr. Market knocks on your door and offers to buy or sell assets. Some days, he's excited. Prices are high. He's optimistic. Other days, he's depressed. Prices are low. He's fearful. Here's the lesson. Mr. Market is emotional. You don't have to be. An intelligent investor doesn't follow Mr. Market's mood. They use it to their advantage. When prices are low because of fear, they look for opportunity. When prices are high because of greed, they become cautious. You don't listen to the market. You use the market. This brings us to one of the most important ideas in the book, margin of safety. It means protecting yourself before chasing profit. Imagine crossing a bridge. Would you choose a bridge that barely holds your weight? Of course not. You want extra strength, extra safety. Investing works the same way. An intelligent investor buys assets below their true value. So even if mistakes happen, they are protected. No investment is perfect, but margin of safety reduces risk. Smart investors don't ask, how much can I make? They ask, how much can I lose? Benjamin Graham explains two types of investors. First, the defensive investor. This person wants safety. They invest consistently. They don't chase trends. They avoid stress. Then there's the enterprising investor. This person studies, analyzes opportunities, and looks for undervalued assets. Both can succeed, but both must follow discipline. The problem isn't which type you are. The problem is acting without a plan. You don't need to be aggressive to build wealth. You need to be consistent. Benjamin Graham delivers a brutal truth. Your worst enemy in investing is yourself. Fear makes people sell at the bottom. Greed makes people buy at the top. The intelligent investor controls emotions. They don't react. They respond. Wealth isn't built in excitement. It's built in patience. Those who stay calm win in the long run. Benjamin Graham said, the investor's chief problem, and even his worst enemy, is likely to be himself. This means success isn't about intelligence. It's about discipline. If you master your emotions, you master investing. The intelligent investor teaches one clear message. You don't need to beat the market. You need to survive it. Long-term thinking beats quick wins. Patience beats prediction. Discipline beats luck. This mindset creates real wealth. If you found value in this summary, like this video and subscribe to Money Mindset Summary for more powerful book breakdowns. Comment intelligent if you choose patience over emotion. Remember, smart money is calm money. See you in the next video.